Hello, friends. Today we're going to talk about the best mutual funds to invest in for 2025. So, friends, today we'll suggest three mutual funds based on your risk taking capacity, categorized by risk levels and expected returns. Now, let's assume that you invest just 1,000 rupees every month in the schemes we're about to discuss. If you follow the first option, you can build a fund of around 72,215 rupees in just 4 years. If you follow the second option, it can grow to 81,936 rupees. And if you follow the third option, your fund may reach a huge 63 lakh 40,869 rupees. Before that, we'll show you a comparison of these three best mutual funds. One of the biggest advantages of mutual funds is that they offer risk reduction along with the benefit of compounding growth. So let's now talk about the three mutual funds that could be the best for you in 2025. We'll discuss a mix of active and passive mutual funds, so you should clearly understand the difference. In active mutual funds, the fund manager personally decides which company shares to invest in to earn higher profits. But these usually come with higher risk and a higher expense ratio. On the other hand, a passive mutual fund simply follows an index like Nifty 50 or Sensex. The fund manager does not make active decisions. It invests only in the companies listed in the index, so the risk and cost are lower. If you're young or your investment horizon is 10 to 20 years and you want to invest in mutual funds that don't require constant review, then this video is for you. Because today, I'm going to tell you about three such mutual funds that perfectly fit this criteria. But before we move ahead, if you haven't subscribed to this channel yet, please do subscribe for more such financial content. Mid-cap category. At number 1, I've selected a mid-cap fund. Mid-cap funds are those that invest in companies with a market capitalization between 5,000 crore rupees and 20,000 crore rupees. According to market cap, companies ranked 101 to 250 in India fall under the mid-cap category, and they usually have high growth potential. If you look at the history of mid-cap funds, most active mid-cap funds have failed to beat their benchmark returns in the past 10 years. That's why I've chosen a passive fund instead of an active one, a fund that follows the mid-cap index. Motilal Oswal, Nifty Mid-Cap, 150 Index Fund. This fund was launched in 2019, and it currently has an AUM of 1,801 crore. Its expense ratio under the direct plan is just 0.30%. Since it is a passive fund, the expense ratio is lower, as there's no active fund management cost. Also, in index funds, the stocks mirror the index, so the fund manager doesn't have a special role. If we look at the returns of this fund, last 5 years, 32.38%, last 3 years, 21.41%, last 1 year, 10.74%. The second fund I've chosen falls under the flexi-cap category. Flexi-cap mutual funds are considered very good because the fund manager has no restrictions on which market cap segment to choose from. They can pick large, mid, or small cap stocks freely. For a long-term investment, 10 to 20 years, we've selected the Parak Flexi-Cap Fund, which is considered one of the best in this category. Let's look at some fund details. AUM, approximately 88,500 crore. This fund was launched in 2013. It follows the Nifty 500 TRI as its benchmark. Expense ratio, direct, 0.67%. If looking into trailing returns, last 10 years, 17.89%. Last 5 years, 21.15%. Last 3 years, 18.55%. Last 1 year, 15.27%. You can clearly see how strong its long-term returns are. This fund ranks at the top of its category for two main reasons. 1. It gives you exposure to Indian as well as US stocks. 2. It's a high alpha generating fund. Additionally, it's the least volatile fund in its category. It delivers strong risk-adjusted returns. It offers excellent fund manager stability. Parak as a fund house has a unique focus. They only manage 6 schemes, and this flexi-cap fund is their biggest, so they're highly focused on it. The fund currently holds 54 stocks, and its asset allocation is well balanced. Now talk about third fund, that is large cap, via index fund. Now let's talk about the third fund, a large cap fund. But here, I'm not recommending a small cap fund or an active large cap fund. Instead, I've selected a passive index fund, ICICI Prudential Nifty, Next 50 Index Fund, Direct Growth, ETF. Let's understand why. Finding the best small cap fund for the next 20 years is difficult because in active funds, top performers keep changing often. And the history of active large cap funds hasn't been great either. Most of them fail to beat their benchmark returns. That's why I've skipped both and selected a Nifty Next 50 Index Fund. This index represents the next 50 companies after the Nifty 50. And these companies are often strong contenders for entering Nifty 50. I've picked Nifty Next 50 over Nifty 50 because these companies often have higher growth potential. They tend to outperform Nifty 50. However, if you prefer more stability, you can choose Nifty 50 index funds too. Let's look at the fund basics. AUM, 6,083 crore. Expense ratio, 0.31%. Trailing returns, last 10 years, 12.83%. Last 5 years, 24.81%. Last 3 years, 16.07%. Last 1 year, 6.79%. You can also consider similar funds from other fund houses. There won't be much difference except in expense ratio and tracking error. So in this video, we talked about 3 best mutual funds for 2025. Here's a quick summary of all 3 funds discussed today. 1. Motilal Oswal, Nifty Midcap 150 Index Fund, Midcap, Passive 2, Parag Parikh, flexi-cap Fund, flexi-cap, Active 3, ICICI, Prudential Nifty, Next 50 Index Fund, Large Cap, Passive. These are the top 3 mutual funds for 2025 based on long-term potential and consistency. But we are not advising you to directly invest in these funds. Whenever you invest in mutual funds, make sure to consult your investment advisor because mutual funds are subject to market risks. If you like this video, please like, share it with your friends or family, especially those planning their investments, and don't forget to subscribe to the channel. Thank you so much for watching.